In life and in trading, good things don't happen overnight. You need to understand that the great trades don't take off immediately. You need time for a good trade to actually absorb a lot of buyers or sellers and move in your direction, guys. In this video, I would actually spend some time on discussing why the trading stop loss syndrome is simply one of the worst things that can actually happen to you. And I would also dive in our latest double-digit returning trade, which was 1:27 risk to reward ratio trade. Let's have a look and let's dive in, guys. The trading stop syndrome is nothing else but traders moving the stop loss too quickly under the break-even point or at break-even, and this basically disables them from reaching very high returns in the first place. In the second place, not only they're not reaching very high returns, but they're getting stopped out. This is something you should not be doing, and you should have a specific system that helps you to track the price or not move your stop loss at all. And again, guys, in life and in trading, things don't simply move in a straight line. You need to have the patience, you need to have the discipline, you should be selecting the high probability trades, and all of this is leading to a bigger and bigger trading edge. And when you combine this with the trading discipline and the risk management tools, then you should be getting one step closer to profitability. But then again, the market environment changes. This is a real test for you to see if newly acquired knowledge and experience combined with the old rules that have been working for you for maybe months or years will be back tested in this new environment. And then again, when you reach this new height, you're thinking that you're there. Don't forget that the market can always surprise you. There might be any fundamental or geopolitical news that can move the market beyond belief and beyond what is already priced in. So there are a lot of things that can actually take you out of the game, so to speak. So if you really want to continuously stay in this game, you should be taking very small, very measured risks and always aim for asymmetrical trading returns. In other words, try to always cap the downside and leave yourself uncapped on the upside. And in order to achieve that, you definitely need a very, very sturdy risk management system. What I wanted to walk you through today is this 1:27 risk to reward ratio trade that I took on Dow Jones. And this was the latest double-digit returning trade, which was taken, and actually it was closed on Tuesday, May the 20th, and it was taken the previous day. So what is spectacular about this trade is the fact how long the price actually took to go lower. As you can see here, this is where trade was taken. So this was 2:32 London time, so literally 2 minutes after the New York opened. And as you can see, stop loss is tight, not so tight considering the fact that we were quite a volatile environment at this time. So, but anyways, the price went in our favor straight away. And at some point I was running a 7 axis or 1:7 risk to reward ratio trade. At this point, a lot of traders would have probably by this time already taken profits. Not our case really. Then what is even more interesting, the price went back a few times to retest the entry almost, and this is where the danger lurks. This is where most traders would have been slaughtered, and they've either trying to book 1:1 risk to reward ratio or anywhere around 1:2, maximum 1:3 when they saw the price coming back to the entry a few times. So this is quite psychological, because imagine you're in this trade, then you're scared that you won't be able to make any money out of that, and this is exactly what takes you away from making money in the markets over the long term. Because if you're a slave to this way of thinking, then you will always be scared of literally running a trade into very high double digits. And of course, you need to have a systematic way of getting there. It's not just to take a trade and wait for it to turn into double digit returning trade. This is not how we do it. You also need to minimize the risk at the entry. There are a lot of factors and a lot of things that are actually helping you to see if the good from the bad trades. But speaking very likely in a way that most traders will look at this trade without knowing what is behind this trade, this is exactly how it is. So at this point, a lot of traders would have been stopped out, or if they were trading the price with a trading stop loss, or they would have just simply taken profits here. Not our case. And this happened on 1, 2, 3, 4, 5, 6 places. On 6 places, you could have been actually either stopped out or taken small profits. The price only took off in the late afternoon session, and this was right here. So at this point, we're running a 13x trade, and this is not where we close the trade. And again, bear in mind, guys, I'm still not moving the stop loss. My stop loss is still intact. It's still staying where it was positioned originally. So I only moved the stop loss during the next day's session, and this was all right here. the stop loss is still there. I'm running a 14x trade, and then when the price is actually making a new low, it's coming back to retest this resistance area. That's kind of the place where I moved my stop loss lower. I just let it there until the end of this trade. But then what happened was that the price actually reversed, and then it continued moving lower, lower and lower until this moment in which I had a 27x trade, and I simply decided to book profits. So the lesson really for today is that trades don't move in a straight line, as I started this video with. So in our particular case, we had this trade which was going lower. We shorted the Dow Jones, but then where most traders are failing in ability to actually stick to their profitable trades. So instead of, if this was our entry and this was our stop loss, instead of sticking with their stop losses, they are actually moving them lower. The most common practice is they always try to maybe book, I don't know, 1x in profit. And this is where most traders are actually failing, because if the price returns, and it always returns, especially when there is a big move that is about to form, the price needs to pick a lot more sellers in this particular case in order to accelerate movement. So if, let's say in our case, the price is here, then of course it is going to stop you out and come back to this level, and then it might actually stop you out on a few occasions. As we've seen, there were a good 6 occasions on which you could have been stopped out. This happens in a matter of 5 or 6 hours, and only then the price accelerated to the downside. So if you have moved your stop losses earlier than the most common newbie mistake, then you definitely wouldn't have had the chance to run very, very profitable trade. Even if you didn't get 27x's, you would have been not able to run the trade. If you close this trade at the end of the session, you might have still taken a good 10, 12x's. As you've seen, the price was already here before it actually went lower. And in this position, the same trading session, we were still making a good around 10, 12 axis. So it is very crucial when it comes to running a trade to be able to manage your stop loss correctly. Otherwise, trust me on that, you're gonna get stopped out, guys. And if you need some help getting there and you want to speak to us, I will leave a link below so you can always reach back to us and we can have a chat, and I'm happy to share with you our risk management system, what we are doing in-house, and how are we able to get those returns and those double-digit trades. Because I know it might sound to you like surreal when you're watching this video, but I can assure you those are real trades. We have taken them in the trading room, and these were trades that were taken in the presence of over 1,000 other traders. So if you're interested to know a little bit more about our approach to trading, just click on the link below and I'm happy to walk you through it. And if you have any questions, again, leave them in the comment section below. Otherwise, I'll see you next time, guys. Bye.